Investing in the stock market has always been considered a very complex thing that only bankers can do, but let me make it very simple and basic for a common guy like you and me. In this video, I'm going to explain three basic steps: how to invest in the stock market using different strategies, when to sell your investments, and finally, understanding the news for any course correction. After this, it is just repeat the whole cycle over and over again and see, it is not rocket science. Hi, my name is Sunny and I make videos that affect a common man financially. If you're new to this channel, please smash that like button as that will help me with the YouTube algorithm and it will be highly appreciated. This is the first and the most important piece of the puzzle, which is how to invest in the stock market. Until now, we have only thought stock market investing is only for investment bankers with some fancy degrees and not for you and me. But believe me, it is just a skill that you and me can learn too. Broadly, there are two ways you can invest: actively or passively. Number one, active investing. As per the name, it is where you take active part in either trading or investing in individual stocks on ongoing basis. Personally, I think trading as a sort of riding the emotional waves of a particular stock, hoping that the next guy will give you more money than what you paid for. Don't get me wrong, we can win once in a while and make some money, but where the fortunes are built, it is with investing, and that too for long term. But for investing in individual stock, you need to read and understand their financial terms, which takes time and will need some financial understanding of the terms used. So now you may be thinking, oh my god, I don't fall into both of the categories, right? Maybe the myth is true that only bankers can successfully invest in stock market. Before you lose hope, let me tell you there is another easy way. Number two, passive investing. This is relatively much easier way for a guy like you and me, where you can invest in ETFs or mutual funds. Both of them are baskets of individual stocks clubbed together, which you can select based on your risk tolerance and the type of industry you want to invest in. Both serve the same purpose, but I like ETFs more than mutual funds just because they cost less to own by way of their lower management fee. Now you don't need to worry that much about risking all your money in one stock, as your risk is spread over a number of companies. A wise man once said, don't put all your eggs into one basket. Here you can even start with small amounts like $100 a month or week or every day, depending upon how much you can spare for your future. This way you will be investing regularly while markets might be up or down, which gives you a dollar cost average, reduces your risk in one stock, builds your habit of saving and investing, and voila! When you retire, you would be surprised that you have got a good nest egg for your golden years. I have made a video about ETF investing in detail, and I will leave the link in the description too. Don't forget to consult a financial advisor before investing, as I am not. This is the second important pillar of stock market investing, which is when to sell if you have to. What are the different strategies that you can use to evaluate when it is the time to take some profits of your investments? Number one, if you need money. You could sell if you need money, maybe for helping your kids to go to university, or if you want to have a down payment for your first house or your investment property, or if there is a family financial emergency that needs to be taken care of. Number two, change in financials. You could consider selling your investments if you find the financial health of the companies you have invested in have changed and thus your risk profile has increased. Number three, better investment opportunities. You could consider selling if you find that there are some better returns with the same risk tolerance somewhere else, and believe me, there is nothing wrong with it. The only reason we invest in stock market is to get better returns than what we get from our bank deposits. This could be in the form of stock market or real estate or some other opportunities like family business, but always keep in mind not to put all your eggs in one basket and manage your risk. The first rule of investing is not to lose your principal investment. Number 4, overvalued stocks. Say you invested in a stock and lately it has run up so much that you think it is overvalued or have run up too fast in short period of time, then you can consider taking some profits off. But if you are investing using ETFs or mutual funds, the best strategy is to keep on investing regularly for longer period of time and you will be surprised by its results. I've made a video how to invest $100 a month till you retire and how you can have over $1 million in your investment portfolio, whose link I will leave in the description too. The stock market is just an indicator of the underlying things going on in our society. Some of the factors affecting the stock market can be political, economic, unemployment data, geopolitics, inflation, and recently COVID-19 Delta variant spread, to just name a few. So I think it's a good idea to watch the local and global news at least once a day. That will give you an idea if any of the underlying fundamentals have changed or not since you invested in, so that you can take the corrective action if needed. This is my take on the topic, stock market investing basics or fundamentals. If you like the content that I make, please help me and my channel by liking, sharing and subscribing to it. Thanks for watching. See you next time in the next video on your own channel, Sunny Snippets.